Alright traders, it's Thursday, November 18th, 2010. I'm back from a pretty long layoff. Been up to, I've been really busy lately, honestly. I'm really going to try to do these videos. I'm actually going to try to do something soon. I'm going to try to put together like a fund. I'm going to try to manage it. So I'm going to want to do this video not only to go over what's going on in the markets, but also to kind of let some potential investors take a look and just see what I think about the market and things. I've been involved in the market. I've been licensed since 1999. I've traded for 4 firms before, and yeah, I guess basically what my thesis is for the coming months, because right now the market's been a tough read in the short term. I actually I was very accurate. I know a lot of you followed me since I started doing these in April, and I caught the initial decline and the flash crash. Then when I wound up going long, SPY went from 120 to like 105. I caught that whole move. Then the rebound to SPY 112. I was long a little for that. Then I got short again, and I caught the move down to the end of July. Then I went long some silver, and I just took out a little too early, and I went short the market. After the pop in the second or third week of September. So I wound up burning myself by reversing that and taking out a silver, thinking there was going to be a slight pullback, which there never really was, because it went parabolic at that point. Going out, I don't think QE is going to help the economy. I don't think it's going to help earnings. I think wages are going to stay stagnant. I think commodity prices are going to continue to creep up. I think oil is a good long-term investment here. Well, long-term meaning for the next 6 to 12 months. I like that. I think that's going to be what actually kills the economy and really puts this bear market back in full gear. So I mean, if I was managing money right now, I would try to buy silver, and more silver than gold. And I've always, since I've been doing these videos, I've said I liked silver more, and it has outperformed a lot. We got a really big pop in silver, like a 60-70% move in a very short period of time. And yeah, I would continue to be bullish on silver and gold, and I would try to short the market, the SPY, or particular stocks. I didn't like SHLD, Sears. Still think that they're gonna have some big problems down the road. I think they could be a possible bankruptcy candidate. So I would pick out certain stocks that look a little weak in the like the retail sectors. You could even look into the banking sector, or short the general market. Commodities should outperform for a while, but eventually, when this economy gets really weak, then commodities aren't going to work either at some point. So I think commodities will get a pop. I think we're still in the we're in the wait and see mode with this QE. I think that you could get some bullish action in stocks over the next few months. But like I said, I would be long the commodities, and I would be short the general market. So that's my philosophy. I think the commodities are going to shrink the margins, and actually, if oil just goes up to 3 in the high threes, $4 a gallon again, like it did in 2008, this economy is not going to be able to handle it. So that's pretty much what I'm thinking right now. There's a lot of interesting things going on. You had the talk recently in the news has been about the naked body scanners, and it's good that it's getting a lot of press, and people in general are saying enough is enough. They don't want to have to deal with all this crap when you go to the airport. There's a lot of stuff coming out on the Trade Center, on the World Trade Center 7. on Fox News before Geraldo used to bash 9/11 truthers, and now he had a show. And he had a lot of architects and engineers on there, basically saying that it was imploded, and he's now switching his stance to a more open stance, and it's very good that this comes out, because there is a lot of a lot of the stuff that's going on right now with the Federal Reserve, what they're doing. It's really bad for the majority of people. It's good for these banks, these big six banks, and it's just it's the wealth gap continues to increase. We're at the widest. By the wealth gap, I mean the minority is taking more and more of the wealth, and it's kind of been set up that way. I mean, I'm actually going to try to do like an in-depth video going over this, basically describing how over the last 30-40 years, how the upper class and really a small percentage of the upper class keeps taking more and more, and the middle class keeps getting squeezed harder and harder, and the debt levels keep rising. So it's very you got a lot of bad cross currents going on at the same time. These things are important, because you have to be aware of what's going on in the world. You have to understand what the Federal Reserve is doing. You have to understand that this is kind of a power grab by the powers that be. Everything's collapsed. It seems like everything is collapsing all at the same time. Countries are in debt, personal debt, real estate debt, asset bubbles. It's just at an epic level, and it's even if the conspirers are not successful in forming a complete world government per se, the economy's still in big trouble. So even if you want to prosecuting people in the government that are not acting on the best of American citizens, even if you kick all the bums out, you're still going to have a big mess to deal with. And how do you fix all this? And it's going to take a long time. So this thinking that this bear market is over is I think it's very foolish, and I think it's going to fool a lot of people. So you got to keep that in mind as a long-term investor. When you're trading, I mean, you could always, I'm telling you right now, I mean, the market's kind of hard to read right now. You had a big rally in the SPX today. You were up 1.54%, and you opened on the SPY. You opened at 119.36 and you closed at 119.96. So most of the gains were on the gap, and you closed below the 18-day moving average. You are oversold, and the histogram ticked up today. So as far as there being much more downside here, you might have another retest at that 1760 area, but I don't know if you're going to get big downside just yet. I would be looking to get short up here. The market's gone parabolic since September. It went from SPY 104 to SPY 123, which is a very big move in a short period of time. And I think there's going to be more skeptics on whether the QE is going to help the economy. I'm telling you, it's not, because it's not going to go into the hands of the masses, and the masses are struggling, and they're going to continue to struggle. There's going to be more and more foreclosures. More and more people aren't repaying their debt.